Episode title: Know Who You Are, Trading DNA and the Context of Day. Welcome to the system that man built. I'm glad you're back. If you caught our first episode, you know this podcast is about one thing: building a trading system around who you actually are, not who you think you should be. Today we're going into two concepts that changed the way I approach every single session. The first is trading DNA. The second is context of the day. Together, they answer the question that most traders never even ask themselves: am I trading the right strategy in the right market condition for the right personality? Let's start with trading DNA. Tom Vorwald is one of the few people who has coached multiple World Trading Cup champions. When he was asked to distill what separates the traders who win from the ones who grind themselves into the ground, his answer wasn't about indicators or setups. It was this: don't pick your strategy, let your DNA pick it. Vorwald's framework identifies two fundamental trader archetypes: counter traders and trend followers. Counter traders are naturally patient. They're contrarian. They're uncomfortable with obvious moves. When the crowd piles in and momentum is building, the counter trader gets suspicious, not excited. Their edge lives in fading extremes, buying into chaos when everyone else is selling, entering at levels where the institutional order flow has absorbed everything the sellers could throw at it, and the tape goes quiet. Trend followers are different. They're fast. They adapt quickly. They're comfortable riding an established direction and adding to winning positions. Their edge lives in breakouts, buying the retest of a breakout level and letting momentum carry them to the next structural target. Here's where most traders destroy themselves. They're one archetype trying to trade like the other. A counter trader who chases breakouts gets in late and stopped out at the worst possible moment. A trend follower who tries to fade extremes enters too early against institutional flow and gets run over. The mismatch between personality and strategy is, according to Vorwald, the dominant root cause of consistent losses, not the strategy itself, not the market, the mismatch. So how do you know which one you are? Start with this question. When the tape goes chaotic, when a stock is spiking hard and every tick is making the crowd scream buy, what do you feel? If you feel urgency, if you're reaching for the entry because you don't want to miss it, you're probably a trend follower. If you feel suspicion, if your first instinct is who's selling into this, you're probably a counter trader. Patrick Nill, a two-time World Cup champion who trained directly under Vorwald, put it simply. He said the most important thing Vorwald ever told him was to know who you are, because you cannot be a counter trader when you sometimes swim with the trend. Partial alignment isn't alignment. It's confusion with a strategy label on it. Now let's talk about context of the day and why it has to come before anything else. Patrick Nill describes this as his mandatory first step every morning, before he looks at a single setup, before he pulls up a chart, before he even opens his scanner. He asks one question: will today be a trend day or a balance day? And here's why that question matters so much. Tom Vorwald classifies every trading day into one of three market formations. He calls them D, B, and lowercase b. D days, named because the volume distribution looks like the letter D, are balance days. They represent roughly 70% of all trading days. The market is in equilibrium. Buyers and sellers are matched near fair value. Price rotates within a range. The institutional players with conviction are largely absent. On D days, counter-trade setups are what you want. You're fading the extremes of the range back toward fair value. You're entering at the value area high and targeting the volume point of control. You're entering at the value area low and targeting the same. You're not chasing breakouts, because on a D day, every breakout fades. B and lowercase b days are imbalance days. The B is bullish imbalance. Institutional players with directional conviction are moving price higher in a sustained way. Lowercase b is bearish imbalance. These days represent about 15% each of all trading days. On B and B days, trend follow setups are what you want. You're entering on the retest of the breakout level. You're letting winners run because the institutional flow is carrying the market toward its target. You're not fading the move, because on a trend day, every fade gets steamrolled. Now here's the critical point. If you don't establish context before you look at setups, you're flying blind. A counter trader who shows up on a B day and starts fading moves is fighting institutional directional flow. A trend follower who shows up on a D day and chases breakouts keeps getting stopped out as price rotates back to the range. Context first, setups second, always. How do you build the context? Patrick's process uses 3 inputs. First, the prior day's volume profile structure. Was it a D formation, balanced, or a B formation trending? Where did price close relative to value? Where is overnight price relative to the prior session's value area? Second, volume behavior. Patrick said something specific that stuck with me. Every time the market is about to flip direction, you see big volume at the structural break. But when you look deeper into that move, the volume at the extreme is actually thin. Big volume at a structural break signals conviction. Thin volume at an extreme signals exhaustion and reversal. Those are 2 completely different situations that look similar on a basic chart. Third, the news and catalyst calendar. Major economic releases, jobs reports, Fed announcements, CPI, create genuine institutional directional flow. Those are trend days by design. You know before the open that conditions favor a B or B formation. Counter-trading against genuine macro flow on a Fed day is how accounts get damaged. Here's where these 2 concepts connect. Your trading DNA tells you which type of setup fits your psychology. Context of the day tells you which type of day the market is offering. The goal is alignment. Counter trader plus D day equals your highest probability setups. Trend follower plus B or B day equals the same. When those don't align, when you're a counter trader and the market is clearly in a B formation, the correct move is to sit on your hands, not to force setups that don't fit the day, not to trade the counter trade playbook against institutional momentum. Just wait. Patrick Nill called this patience doctrine explicitly. The hardest part of being a counter trader isn't the entries, it's the sitting. It's watching a stock run hard and not touching it because you know it's not your setup and not your market condition. He said, find the way you feel comfortable. That's where your edge lives. That's the system. Know who you are. Know what the market is offering. Only trade when those 2 things are aligned. That's what we're building here at Strong Stock Trading. A system designed around the trader, not around a generic strategy that works for someone else. Thanks for listening to The System That Man Built. If this resonated with you, share it with one trader who's been grinding in the wrong direction. Sometimes the breakthrough isn't a new indicator, it's realizing you've been the wrong archetype the whole time. I'll see you next episode.